I've stress tested this ICT indicator in all kinds of market conditions. Today, you'll see exactly how it works, and whether these institutional concepts really give traders an edge. Let's just say the market had plenty of chances to humble it. Most retail traders struggle with timing and market structure. We often trade against big players' order flow without even realizing it. The challenge isn't spotting opportunities, it's spotting the right ones at the right time. After studying ICT concepts, I tested the ICT Daily Levels and Zones indicator by Fadi on TradingView to see if institutional timing and levels actually translate into consistent results. Let me walk you through the core concepts this indicator tracks, then I'll show you the backtesting process I use to measure its performance. Because as traders, we all know backtests don't pay the bills, but they might just save you from blowing the account. This video is sponsored. Look, you know I never advertise scammy exchanges or get-rich-quick schemes. But since we started this backtesting series with Forex Tester team, I've had zero doubts this is actually useful. So yeah, they're sponsoring this one. ICT methodology is broad, but for this strategy, we're focusing on smart money timing concepts. The core idea: institutions don't trade randomly. They operate during specific windows, when major banks execute their largest transactions. Most retail traders focus on obvious session opens, and often show up late to the party. Market activity clusters during precise timeframes, separating institutional moves from retail noise. Smart money uses probability-based models to project daily ranges. The indicator mirrors these calculations, showing where algorithms expect support or resistance to form. This indicator tracks multiple concepts, but here's what matters for trading results. I focused on testing the most actionable combination. The setup is straightforward. We're trading the 2 p.m. European Silver Bullet session on EUR/USD. This is ICT's New York afternoon kill zone when institutional algorithms are most active. Price consolidates during this 1-hour window, then breaks with conviction. This sounds logical on paper, but here's the thing. Most ICT concepts look perfect in theory. The real question is, does this actually make money when applied in live trading? I found out, but here's what most people miss. You can't backtest this on TradingView's strategy tester. The fills aren't realistic. That's where Forex Tester Online made the difference. The platform uses actual historical tick data. When you enter a trade, it simulates realistic bid-ask spreads and slippage based on market conditions at that exact moment. Before testing anything, I had the ICT Daily Levels and Zones indicator converted from PineScript to JavaScript for Forex Tester Online. After adding it to the platform, the configuration was simple. We're testing the Silver Bullet session that appears at 2 p.m. European time. This is where the London and New York sessions overlap. The New York afternoon kill zone when institutional algorithms create high-probability setups due to maximum liquidity and volatility from both major financial centers being active simultaneously. It's the overlap where algorithms hunt liquidity and retail traders provide it. The indicator needs to recognize this 1-hour window and mark the session high and low. That's it. In the indicator settings, you can toggle off everything else, only setting the open and close times for the New York afternoon session. After you click Apply, you'll see the Silver Bullet session box appear on the chart, clearly marking the 2 to 3 p.m. window, with the high and low levels we need for our breakout strategy. The platform makes testing efficient with its navigation features. You simply click Go To and select the Silver Bullet session option. This jumps you directly to each 2 p.m. window without manually scrolling through hours of data or stopping to find the sessions yourself. You can move from one Silver Bullet setup to the next instantly. Creating the Silver Bullet test in Forex Tester Online is straightforward. New project, Euro per US dollar, 15-minute time frame, $10,000 starting balance, 100 to 1 leverage, $7 commission per round trip, real broker conditions. For the symbol properties, I've enabled floating spread from tick data with a 1.5 pip spread, 15 points, which gives us realistic market conditions during the NY session overlap. The swap costs are set to 0 since we're testing intraday breakouts, and minimum distance to price is at 0 for immediate execution. However, these settings might be different depending on your broker. Some ECN brokers offer tighter spreads during high liquidity periods, while others may have minimum distance requirements for stop orders. Feel free to optimize these parameters to match your actual trading conditions. The Silver Bullet has specific criteria separating it from random breakout trading. During the 2 to 3 p.m. window, we identify the session high and low as our key levels. When price breaks above the session high or low with a strong 15-minute candle close, we wait for a retest. Execution follows the retest method. After the breakout and candle close confirmation, place a limit order at the broken session level. For longs, the limit goes at the old session high, which now becomes support. For shorts, the limit goes at the old session low, which now becomes resistance. Stop loss placement follows the session structure. Long trades get stops below the session low. Short trades get stops above the session high. This level flip is classic institutional behavior and gives us better entry prices. Basically, buy where retail panic sells and sell where retail FOMO's in. If price doesn't retest the broken level within 2 to 3 hours, the setup expires. This prevents chasing stale setups and keeps our strategy focused on high probability entries. Profit targets use a 1-to-2 risk-reward ratio. If we're risking 20 pips, we target 40 pips. Risk management stays consistent at 1% of the account per trade. Position sizing adjusts based on stop distance to maintain this 1% risk level, but the actual risk amount remains constant regardless of pip distance. For example, if your stop is 20 pips away, you calculate position size to risk exactly 1% of your account on those 20 pips. If the next trade has a 30 pip stop, you reduce position size proportionally to still risk only 1% of your account. Because blowing up your account slowly is still better than blowing up fast.
What?
We're going to test this strategy during the same period, May 2003, going as far back as FTO allows us, with a few other Euro-USD setups since we have more coming. We'll release a spreadsheet with all the data for you to download once it's ready. Stay tuned for that. As you can see, we've already done some initial testing to determine if this is worth your time before diving deeper and gathering more data to analyze. Now we simply click Go To, then Silver Bullet, and it takes us straight to the next trade setup. Hold the Shift key and click on the right arrow to print candle by candle, or use your mouse to click forward or backward through candles using the slider. Here we have a high volume candle closing below the session low, which means we'll place our limit order right at the session low level. Here we have the position sizing and risk reward tools. You can save them to favorites so they stay on screen for quick access. You'll need them frequently. Once again, our entry will be right at the session low level, with stop loss just above the session high, and we'll target 2 times our risk. Here's a neat trick. Click on this box, and while it's selected, click New Order. You'll see that entry, stop loss, and take profit are already set to match the risk-reward tool parameters, so you don't have to adjust these levels again. Pretty cool, isn't it? If you need to change your parameters, use the sliders on the left when you open the order box, or simply add values manually. We'll adjust our risk to exactly 1% and target 2%, and the platform calculates the rest automatically. Now click the Place Order button. Again, hold Shift and click the right arrow for candlestick progression. As you can see, our limit order got filled. Let's see where this trade takes us. Use the same method. Hold Shift plus click the right arrow, or if you want the price action to roll continuously, just hit Enter. You can adjust the speed with the slider. This trade didn't go anywhere since we reached the daily close, so we'll close the position and move to the next one. Click Go To, then Silver Bullet again, and it jumps straight to our next setup. Shift plus right arrow, one by one, and we have another break below the session range. Let's grab our risk-reward tool and adjust our exits. Hit New Order, and again, everything is preset based on our risk-reward tool levels. A couple of small adjustments and we're ready to place the order. Let's see if it gets filled. Yes, we got filled on the 5th candle. Let's continue. This one also reaches the daily close, so we close the position. We're slightly profitable, but this isn't exactly what we want to see. Trading isn't perfect though, so let's continue. Next one, Go To. Here we are. Let's advance a few more candles, and we got a nice breakout above the range. Let's open our tool, make a couple of position adjustments. New order. Adjust the risk and take profit to stay disciplined, and click Place Order. Here we got our first winner. Let's see if we can get another one. We have a short position to enter now, making our usual adjustments. Placing the order. Unfortunately, it didn't get filled, even though price moved in our direction. We still have our limit order active, so let's close it. As you can see, we get different scenarios, and you never know which way price will move. Want more action? Let's test a few more trades. Go to Silver Bullet. Looks like we have a short setup here. It's up to you whether to take these late setups. It was 12 candles before price broke outside the range, making it somewhat indecisive. Let's check it out anyway. Everything's set, let's place the order. It filled immediately and hit our stop loss. We'll do a couple more before wrapping up. Another short position here. Oh, I just noticed we still have another limit order open. I probably didn't close it properly earlier. That's okay, but don't do this with a real trading account. Let's close it down. With that out of the way, here's another setup. And it fills right away. Let's see what we got. We have a winner here. Very good. Last one, I promise. I have to say, this is quite addictive. Not sure why. Maybe because you know you won't get punished, and it's still satisfying to see winners, even though they're not real. Well, they are real. Or were real. You get the point, right? And we'll finish with a long position. While I set this up, quickly write in the comments whether you think this will be a winner or loser, so I know how many of you made to this point. It got filled, which is already good. At least we have a position open. We finish with a winner.
Nice.
During testing, I noticed many trades would perform better with higher profit targets, and fewer stops would trigger with wider stop losses beyond the session levels. But that requires extended testing. I'll leave those experiments to you. Here's the key point about backtesting. It's not about copying someone else's results or trusting random YouTube claims about strategy profits. Backtesting is for testing multiple variations of your strategy on your specific instruments. Test different settings, time frames, time periods, seasonality, everything that matters to your trading. The goal is building confidence in your approach, so you know whether to proceed with live trading. For those asking for profitable strategies, you're either new to trading or haven't grasped how this works yet. No offense, but that's reality. The edge comes from your own testing and understanding, not from copying others. If copying strategies worked, we'd all be retired by now.
Meanwhile,
The FTO team have been very generous this time to you guys, and they'll give you exclusive access to the JavaScript converted ICT Daily Levels and Zones indicator, so you can use it right away, plus a 25% discount for the Pro package that stacks on top of any existing promotions on their website. This applies to all licenses and subscriptions, whether you choose yearly or lifetime options. To take advantage of the free indicator, the Pro version is the one to go for, and you can add as many new indicators as you want later. You'll find the special discount code along with our official link. Silver Bullet testing showed potential when applied precisely. But this is a small sample on one pair. Real validation requires years of backtesting across market cycles, instruments, and conditions. Consistency isn't about winning every trade, it's about surviving the dumb ones. What I've shown you is the framework for proper testing. Whether you use it, that's up to you. I'm providing the methodology, you do the validation. Don't take my word for it. Test these concepts risk-free, adjust parameters, and see how the system performs. I'm not here to make you money. I'm here to show you how to test if your strategies can make money themselves.